Hi everyone, and welcome. Thanks for taking the time to join today. If your organization operates multiple companies in Xero, you've probably faced the challenge of combining financial data into a single group report. Many finance teams still rely on exporting spreadsheets, copying data between workbooks, and manually eliminating intercompany transactions. As the number of entities grows, this process becomes slower, more complex, and more prone to errors. In this webinar, we'll look at why Excel-based consolidation becomes difficult to manage, the most common consolidation challenges, and how modern finance teams can automate the process. Let's begin. For many organizations, the month-end consolidation process follows a familiar pattern. Each entity closes its books separately. Financial statements are exported from Xero. The finance team combines the data in Excel. Adjustments and eliminations are performed manually. Finally, management reports are prepared and distributed. This approach works when there are only a few entities. However, complexity increases rapidly as the group expands. Excel is incredibly flexible, but flexibility often creates risk. Different versions of files circulate among team members. Formulas are accidentally modified. Links break. Manual adjustments are difficult to track. And when management asks how a number was calculated, finding the answer can take significant time. Many finance teams spend more effort maintaining spreadsheets than analyzing results. Let's look at the four most common challenges. First, intercompany transactions. Revenue recorded by one entity may appear as an expense in another. These transactions must be eliminated to avoid overstating group performance. Second, chart of accounts differences. Even when entities use Xero, account structures are often inconsistent. Third, multi-currency operations. Groups operating across countries must translate results into a reporting currency. Finally, reporting deadlines. Management often expects consolidated reports within days of month-end close. Manual processes make this difficult to achieve consistently. Here's a simple example. Company A invoices Company B for $100,000. At the individual company level, the entries are correct. However, from a group perspective, the transaction occurred within the organization. If the transaction is not eliminated, both revenue and expenses become overstated. As the number of entities increases, identifying and eliminating these transactions manually becomes increasingly difficult. The direct cost of manual consolidation is not just time. It also impacts confidence in the numbers. Finance teams often spend hours validating results, checking formulas, and reconciling differences. This is valuable time that could be spent on forecasting, planning, and business analysis. Modern consolidation platforms automate many of these steps. Instead of exporting data into spreadsheets, financial information flows directly from accounting systems into a centralized consolidation environment. Eliminations, mappings, and reporting rules can be configured once and reused every month. This reduces manual effort and improves consistency. Let's walk through a typical consolidation workflow. We'll connect multiple entities, import balances, configure elimination rules, run a consolidation, and review the resulting reports. We start by connecting our Xero organizations. Simply click on Connect to Xero. You will be redirected to Xero to log in and authorize access for Xero Connector. Once data loading is completed, you will be redirected back to Xero Console. The chart of accounts and trial balance will be loaded. Next, map local accounts to the common group chart of accounts. You can map accounts manually one by one. Alternatively, you can use Xero Map for AI-assisted account mapping suggestions. The AI will provide suggested mappings based on the account code, name, and section. You can review and confirm them. Once the mappings are confirmed, the data will be consolidated automatically. You can then define intercompany relationships and elimination rules. These settings can be reused in future periods. The system generates consolidated financial statements and supporting reports. Users can drill into balances and investigate underlying transactions when required. Xero Console also provides balance sheet, cash flow, and other financial reports. There is no need to run the consolidation process separately. All data is consolidated and eliminations are performed automatically. By automating consolidation, finance teams can reduce reporting cycles, improve accuracy, and create a more scalable reporting process. As the organization grows, the consolidation process remains manageable. To summarize, Excel can be effective for small groups, but complexity grows quickly. Intercompany eliminations and multi-currency reporting create additional challenges. Automation reduces manual work and improves confidence in the numbers. And ultimately, faster reporting helps management make better decisions. Ready to see Xero Console in action? Start your free trial today.